Now, continuing with this time frames, budgeting roles in formulating and controlling short-term objectives. Now, understand this, as I said you earlier in the previous video itself. Okay, long-term goals are set, and those long-term goals are broken down and made into short-term goals. So now what happens, you as having budget in front of you, is that you can control the activities, you can control the goal setting when you are having the budgets in front of you. Then measuring performance against established is nothing but comparison of the budget and the actual, where it went wrong, why it went wrong, and how much is the variance in it. You can establish their performance, you can measure their performance, you can monitor and control expenditure also. Like suppose, okay, this is not in the budget, this has not been assigned in the budget, not required to expend for this time. You can have proper reasoning around it. Now variances is again continued in the next chapter, where I'll be explaining it in more detail about what variances are. Now, the role of budgeting in facilitating communication among organization units and enhancing coordination of organizational level. I have already discussed about it in the previous video. Make sure that you complete that. That's a 13-minute video, previous one. Characteristics of a successful budget process. You can see that there is a sufficient lead time. Now, what exactly is a lead time? Is nothing but once you inform about the budget and then coming into the actual, and whatever time takes in between, that is sufficient enough. Like suppose, according to the budget, you need to do something suddenly tomorrow, so that means that there is no lead time, but you have some time. Like suppose, according to the budget, we need to plan something which is there going to be happening in December. So now you are having good ample of time to plan for it. Suppose you don't have, like suppose tomorrow you have to plan for some event or something, some expenditure, you cannot plan for it. Understanding? Tomorrow suddenly you say that you have to make an expenditure tomorrow, not possible. Then there is a budget manual where you would be seeing, okay, this must be the budget, this is the mandate about the revenue must be this much, and then if the revenue is 100%, then the cost of this particular thing must be 8% of it or 10% of it, something like this. You can keep your own budget guidelines. All right. Then effect of external factors on the budgeting process. Like suppose, whatever budgets you are going to make, whether it is coming under the general economic conditions, you need to keep that into picture, because you cannot just say that, okay, this was not there into my decision while I was formulating the budget. You cannot say that. You need to understand what industry is and how can this industry get affected with whatever things going around. Then the concept of controllability, how do you control the budget accordingly, which I have mentioned again and again in this class itself. Then revisions to the budget. If suppose you have to analyze and then reassess and then again recalculate and assess a budget, you can do that, because there is nothing as such care. Once you have put down a budget, that you cannot change the budget. If that is the case, then there will be issues coming up front, because what you are doing in budgeting is that you are budgeting something for the complete year or for a complete quarter or complete for half year. So whatever budgeting you are doing, you need to make sure, okay, if there is any changes coming in between, I'll be able to hinder it, and I can be I can change things and then go ahead. I can add an escalation out there, or I can remove something out of there and then go ahead. Now, criticisms and limitations of budgeting process. You can see lower level managers, other workforce feel that management across the board cuts when early budget it. Now, when they are making their budgets, they don't keep them into consideration. That's what they think. Then budgeting is actually based on years time. When it is years time, you cannot estimate and say that, okay, that can be the cost for the complete year. Chances are difficult to get you understanding, okay, पूरा बजट का मतलब complete 1 year, not understandable. Then budgets and standard cost. You can see here, whenever you are making budgets out here, standard costs are predeterminedly expected, but this is not the final actual price. That's not the actual cost. These are all expectations predetermined rates are there. According to these predetermined rates only, you would be taking decisions here. So what you're doing is nothing but you're setting standards here. The standards are set according to the activity analysis, according to the historical data, according to the direct materials which you are going to purchase, how is it going to be, what you would be giving to the direct labor. You are setting all these standards. Now standards can be set authoritatively or participative. It's same, the budget. Whether you do it bottom up approach or top down approach, that depends on you completely. Then ideal versus practical standards. It's ideal is kind of a thing like, every idle time or every downtime, you just remove it. You say that 24 hours you are working, 24 hours you are working like a machine. Those are ideal standards. Practical standards are like standards which can be attainable, which are okay, which keeps into consideration all the expenditures, all the downcomings, upcomings, everything. Downcomings and upcomings in the sense that whatever loss can happen, whatever profit can happen, these all things practicality into approach, practicality calculation, very good standards. But still we talk about it so that you have understanding what's ideal budget and a practical standard. Then the master budget. Master budget is nothing but a comprehensive budget for the annual profit plan. So it's nothing but what I can say is nothing but you are going to make the complete financial statements of an organization 1 year previous than it is going to happen. What you are doing is you are expecting this to happen. See, the first process when you are doing budgeting, then the answer is called planning. What is the first budget you will make while doing budgeting? Then the answer is sales budget. Now whatever is given here, you need to make sure that you have a proper understanding of this, because this is how the master budget or this is how budgeting process will go on. First you will make a sales budget, then later on what you will do is nothing but you will make a production budget. What you are estimating first is, okay, I must be selling these many units. Okay, if I have to sell 10,000 units, I have to manufacture 10,000 units. So when I have to manufacture 10,000 units, how much is the raw material required? How much is the labor required? Then would be how much is the employees which would be required, manufacturing overhead required. So according to that only you are going in. So first what you are doing, you are estimating your sales. According to the sales, you are doing your production, direct material, direct labor, employee fringe benefits, manufacturing overhead, ending finished goods inventory, cost of goods sold budget. Then non-manufacturing budget, it comes with R&D, design budget, marketing, distribution, customer service, administrative budget, and then last comes pro forma income statement. These all things when we do it, then budgeting is done. Then there is financial budget also. Now financial budget comes with capital budget, projected cash flow disbursement schedule, projected cash collection schedule, cash budget, pro forma balance sheet, pro forma cash flow statement. These are all expected. Now understand this, these all budgeting is predetermined. You are forecasting this. Alright. So coming towards this, the theoretical concept out here. What we do is nothing but the sales budget. You make up one sales, you estimate, okay, this much must be the sales. That is the expectation of the sale. And then what you do is nothing but according to that sales, you prepare the next budget, which is production budget. Now here I would not be going in complete details in what exactly the budget, because here you can see theoretical concepts are given. What I'll do is I'll just go through it overview. Like first, then production budget, you need to understand here. What happens in production budget is, suppose I have to make sales of 10,000 units. That is my budget. Now according to that I have to manufacture 10,000 units. Now when I have to manufacture 10,000 units, I have to first see here. Now this is the technical point. How much is the ending inventory I am already having, which is nothing but my opening inventory I am already having. Suppose I am having 2,000 in opening inventory. Then how much I have to manufacture is 8,000 units. Now the question will come in addition to that will be, you need to keep a closing stock means at least 20% of the closing stock of next month's sale. Next month's sale, you need to have a closing stock of 20%. So I need to maintain how much? 2000 plus. So I'm already having, I need to make sales of 10,000 units. I'm already having 2000 in my stock, so I have to make 8,000. Then I need to have a closing inventory. Expected, okay, closing inventory, sorry, the next month's sale is suppose 12,000. So 20% of it is nothing but 2,400 must be my ending inventory. So what I'll do is 10,000 is the required sales minus 2,000, which is my opening inventory, then plus 2,400, that is my ending inventory, which is required according to the question. So how much I have to manufacture now is nothing but 10,400 I have to manufacture. So this is the exceeding level which you would get a question where people will get confused. The same production question will come under raw material purchases budget, expenses, raw materials budgets, and purchases budget. But that won't come under the sales, expenditure budget. Raw material and stock purchases, what you can do is nothing but you can keep it in stock. You are already having it, then you can use it. That does not come under labor. That does not come under expense budget. I hope you guys are getting clarity over here. So this is one example of a cash budget. Make sure that you watch the next video, which would be on the practical things. Or in fact, what I would say you is that you guys need to go through the few questions of budgeting and then come back to me with your questions, because I already have a video which is uploaded on I guess it's uploaded on YouTube. If it is not, I'll upload it soon. It is about problems in budgeting, which I would be doing also. If you find it difficult, I'll do that too. So now project budgeting, this is kind of a sample problem. See here, you can understand CMA candidates must know how to both apply and select specific budgeting method. They may also be required to explain specific actions such as why a method should be selected. All topics are eligible to be tested on the multiple choice section, the essay section, or both. One of the biggest chapter, very important too. Now, a project budget consists of the cost expected to attach to a particular project, such as the design and the new airliner on the building. Now here you can see here example of a project budget. You can see here first quarter, second quarter, third quarter, fourth quarter, what all are the design, engineering, production, marketing, accounting and human resources cost. Totals are being given. Now activity based budgeting, what he's telling is nothing but what I need to do here what I have to do in this budgeting is nothing but I need to apportion these costs. I need to apportion, like I'm having the totals down here. What I have to do is nothing but, is it this question continuous? Yes, this question is the manufacturing example 10-2. Okay, 10-2, is it continuation? No, it's not continuation. Now this is just an example of a production project budget. Now comes activity based budget. Now activity based budget, what you are doing is nothing but you are having simple valve and complex valve. You have been expending 50,000 units and 10,000 units. You are having the total manufacturing cost out there itself. Now what you would be doing is nothing but you are allocating these indirect costs to according to their cost drivers, as learned previously in basic cost management concepts, that how do you assign the cost drivers. Once you assign these cost drivers, these all costs will be allocated accordingly. I have explained it in another video. Make sure that you watch that soon. Then comes another concept, methodology, which is zero based budgeting. Now when zero based budgeting is there, what you do is nothing but you just remove all what has happened previously and take a fresh minded thought about how budgeting must be done from now. You remove all the historical data and you focus on what is future related data and then make a budget based on that only. That is zero based budgeting. So what you do under zero based budgeting is nothing but you ask for justification on every expenditure or every income which is going to happen what is the justification, why are we expending this, what is the reason for this, that you would be doing. That is ZBB. And then continuous rolling budget is nothing but you would be making a budget every quarter. You would not be making, once in a year. Not once in a year, you would be making on every quarter or every half yearly or every year, and you continue it. Now, continuous rolling budget is not called a revision of budget, but this is just a method of making a budget. I hope you guys get that. Then operational budget calculation, production and sales forecast. Now here understand this. Now this is coming towards the calculation part of it. As I said you earlier, with the sales budget 1000 into 400 selling price, you found out what is your sales budget. Now production budget, what is coming? Now here you can see there is a question given. Okay, you need to have a desired ending inventory 10 month of next month's sales. Right now you calculated projected units in sales. With the same question you came forward. See, add desired ending inventory and less the beginning inventory, you would get units to be produced. Clear? As I explained you previously in a theoretical concept. Then comes direct materials, how much is required. See, every year here he has given okay, raw material per finished good is 4 here, 4 here and then 3 there. Out of that, what is the cost of it? Out of cost of it, then it comes the desired next month ends need. And then what is your beginning inventory? So if you have this clarity, what will happen is, then you can have what is your expected raw materials to be purchased. You can make a budget according to it in continuation. Alright. Then comes with labor. Now labor, what you do is nothing but how many units you have to produce. We got it. Now when we got to know how many units to be produced, how many hours is to be levied out of it. Now when we know how many hours is to be levied, then we calculate the per hour of that direct labor. Now what happens here? See, while I am telling you, it is looking very, very, very simple. But what happens mainly in your examination or while you practice it, sometimes what you do, you take direct sales, number of sales of units to be taken, and then you multiply it with the labor hour. Biggest mistake. What you have to do is nothing but first calculate that how many units you have to produce. How will you get that? Is nothing but by adding the ending inventory and minusing the beginning inventory. Then what you do is nothing but how many hours will it take? How many hours will it take for per unit? You need to multiply with that and then multiply it with the labor rate. But what wrong can happen is when you don't have clarity and a broader understanding. If you have a narrow understanding, then you are bound to make mistakes here. Same goes with employee fringe benefits too. And then comes with overhead rate for variable cost. You can just multiply with overhead rate and then get that. Fixed overhead budget, you have to just divide it by the production unit production. See here, what is complex here is direct materials budget, it is production budget, and direct labor budget somewhat. Other all budgets are very simple, just a direct calculation. But where you would find it tricky is the production budget, production budget or manufacturing budget, and then purchases budget, direct material, direct labor. Get this clarity, practice more questions there. You may get that in the main exam too. While I was a student, that troubled me also a lot. Then comes cost of goods sold for the quarter. This is again a budget which is made. Here what you do is nothing but whatever you have calculated previously what all you have calculated, you would put it down in this cost of goods sold budget. Then variable costing, contribution. Now understand this, what happens is, while you have to calculate the contribution and all, which we have done it in the CVP analysis, if you've not done it, we'll do it soon. When you're calculating and finding out contribution margin is nothing but sales minus variable cost. Then that that contribution which you get, you divide it by the number of units which you are selling. So what you will get is contribution margin per unit. That is to be divided by the total cost. Total fixed cost. Now when you divide it by that, then you will get the break-even point. Now when you're getting that break even point, you need to understand that okay, this is how it's going on. So make sure that when you're calculating budgets, you do it with this different costing methods also, which is with the variable costing and also with the full costing. Then non-manufacturing budget, whatever the budget is given, just multiply that with the variable selling expenditure and all. Not at all complex. Then the pro forma operating income also goes with the same. Hope you guys get clarity here. Practice more questions here. See pro forma income statement. Just whatever is the estimated, put it there. See, you would get and understand this once you do everything. If you don't do that completely, then you may not get that clarity. Alright. Now, projections, cash flows, which is nothing but the next topic here. Capital budget is nothing but you would be doing this more in your CMA part 2. In part 2 you may expect that also in your examination, NPV, IRR and all, which would be there. Okay, here it's given also. See, NPV, IRR, payback method and all, that would be there in part 2, which is capital budgeting itself. So now what here you have to do is nothing but cash collection schedule. Now what happens here is the cash which you are going to collect. See, this question, this 10-17 is a very good question which you have to understand from this. 5% of sales will be proved to be uncollectible. February sales are 180,000, March sales are 220,000. Now this is your projected sales. Cash sales from the next month, you can see what he is telling is 30% in the second prior month sales, 50% prior month sales, and from current month sales you would get 15% only. Accordingly, you need to go ahead. You would be given question K. Okay, I am going to receive 100,000 rupees in sales today in this month. Out of that, 20% is credit sales. Whatever sales I am doing out of that cash sales, 50% will be received in this month, 30% in the next month, and then 20% in the upcoming month. So what you have to do, you have to calculate what is the cash collection in this particular month or cash collection in the next particular month. So this is the complexity which you would need to understand. But what I have seen is this is one of the easiest thing, and this is one of the very silly mistake where a student can make. So make sure that you avoid that too. Alright. Same goes with those see disbursement, cash budget and all what I have just explained. Then sales forecast. Forecast starts by looking back into historical trends. What is there? According to that, you estimate and calculate what can be your sales forecast. Now this is also which we have done in forecasting. You can do that same here. In the previous chapter we had completed. Then sales percentage of sales method is nothing but okay, according to this percentage, how much is the percentage? It is increasing. You just multiply it with that increasing rate and then you come up with that estimation of what sales can be next. Pro forma income statement, you can see this income statement. I have said it many a times in the class. Make sure that you remember that. Sales minus variable cost gives you contribution, then minus what you do fixed cost gives you operating income, and then slowly you go on minus interest, then you get profit before tax, then minus tax, then you get earnings before earnings after tax, and then you minus your preference shareholders, then you get your minus your you divided by the number of equity shareholders, you get EPS, then you minus a reserve, then you give out the dividend out there, and then again you divide it by the number of shares, you get dividend per share. So this is a pro forma, which is nothing but they have made it. If you remember in the chapter 1, 2, 3, which is financial accounting, we have done that too. If you have not attended that class, make sure that you attend that class soon or watch that video. Same goes with pro forma balance sheet, cash flow statements, financial projections and ratio analysis. So these are things which are there in this chapter. Is there anything else which is remaining out here? If not, then what is there is you guys need to make sure that you prepare a lot this chapter. See what here these topics you're seeing, these questions which you're seeing, like array, this is a big question kind of a thing. See, you are not going to get a big question kind of a thing in your CMA examination. You would be getting per 100 questions. Now, when you are going to get 100 questions, each question you are getting approximately 1.8 minutes, because it's a 3-hour examination. Now, in this 3-hour examination, you cannot expect a long question to solve it out, and these are MCQs only. So you would get a question in between of this. In between some point, you would get this question. So while in this question and answers, when I used to solve these MCQs, I always say that you need to be used to answering new questions. The more you are answering new questions, the better it is for your preparation, and the better it is for your examination. You will be habituated to do new problems. All right, so now I hope this chapter is done. This is the graphical depiction of the master budget process. You guys can go through it. We'll start with chapter 11 soon. Before that, go through the online access of the GLIME material, the best material, which I would say, because I only passed through it and I teach from the GLIME material. Make sure that you complete your online access with budgeting and come up with your questions. I'll be waiting for it. All right, thank you.